there, my name is Mike Munzing with Munzing Mortgage Group. It's time for another market update to talk to you about what's going on in the mortgage industry, the real estate industry as a whole, and what economic factors are going to be affecting your buyers, the rates, and how this is going to impact what we're trying to do out there in the streets. Most of this is specifically for Orange County, California as a whole. I'm down here in South County in San Clemente. Let's jump first, as I often do, just to kind of give an overview of what's going on with the rates. Go to my website at mikemunzing.com, find the rate sheet, print that up, take it with you this weekend. If you're having an open house, feel free to share that with your buyers as well. The important thing, rates are staying at historic lows, absolutely. The important thing to realize, and I'm going to touch on this more later, is what happens when these rates go up. These are amazing lows, and the buyers need to buy now. So print that up, express that to them. Say rates are basically not going to get lower, so they need to take advantage of it now. The market's hot, and this is why. I wanted to touch real quickly also on that HARP 2 program that I talked about a couple of weeks ago. That is really jumping into effect in the middle of March, middle of next month. So we need to be aware of what that might do to our investors. I think a lot of you know that the lenders are no longer sticking around in the industry. I've been here 28 years in real estate, 22 of which have been in lending. And as I look around me, a lot of the old lenders that I knew in the past are no longer around. So now that the government is coming in with a big program, I'm real kind of worried as to what's going to happen with our investors, what's going to happen with the turn times. I'm already starting to see those stretch out. And once they come in with a big program and everybody who's underwater in their homes tries to refinance at one time, this could potentially be a disaster for our purchase business, which is most of what I do, is to helping you guys with the purchases. But on that note as well, also keep me in mind for that HARP 2. I would love to help your clients. Now, those loans have to have been originated back in 2009. So if you have a chance, if you want to go back to your 2008, early 2009 home sales and see who we might be able to help together, keep that in mind as well. If you go back, say, hey, Mike, give me a call, but let me know, hey, Mike, here are some buyers that you might be able to help. They might be underwater, but they're at a fairly high rate. I would love an opportunity to do that as well. So let's jump into Stephen Thomas's report. Every 2 weeks, he gives me the absolute gold to go over with you. He is a statistician. He is a great economist, as well as being a good guy out here in the Orange County market. But he just puts this great information together for Orange County. I like to share it with you so you know what's going on in the market. As he said, it is just smoking hot here in Orange County. We are the hottest market in Southern California. And what he says in here is that, as I mentioned a moment ago, you need to express to your buyers that now is the time to buy. The discount rate is effectively at zero. So rates are not going to get any lower. The banks have to make their profit margin. I know folks say, hey, car lenders get down to zero. Why can't the banks? Well, you got to remember, the car companies are selling cars. They go down to a 0% interest rate to reinforce the selling of their cars. The banks don't have a car to sell, so they've got to make their profit margin. So we are about the lowest rates we're going to see, and that is important. Now, what Stephen points out here is for a $500,000 loan at 4%, if you kick that just up to 5%, 1 percentage point, that mortgage payment will go up by $300. Now, if they have a 4% loan that goes up to 7%, which is where it's projected to be maybe in a couple of years, that's a $940 a month increase in their payments. That is drastic. That'll highly affect what your clients can afford to buy in a couple of years. So definitely keep that in mind. And as I mentioned, here in the Southern California area, the homes that are currently in escrow is about 3,569 properties, and that's of a total availability Total listings of 7,597. What that equates to is a 2.13 months on the market here in Orange County. And it is the hottest market we've seen since 2005. So the really drastic part is that 435 homes in the last 2 weeks have increased in homes currently in escrow. Amazing numbers. Currently, the demand has increased 22% over last year and 10% over the year before. These are amazing numbers, highest since 2005. Now let's jump quickly into the active listings, see how that's been affected. They are down, as I mentioned, 226 homes, down to the 7,597 properties. That's over the report from a couple of weeks ago. And finally, the distressed properties, those continue to drop, and those are down 57 homes to only 489 homes in all of Orange County. Those are homes that are REOs being sold by the banks or foreclosures. And don't forget, if you go get Stephen's report, that is on www.reportsonhousing.com. It is a subscription. You got to subscribe to that with Stephen, but you can get these fantastic charts as well, which really break down your particular market, your particular area. Very fantastic. Well, hey, it should be an amazing weekend. I hope you're going to be out there working. I will be working. You can reach me at 949-689-5626 and call me anytime. I'd love to work with your buyers. Have them go over to my online application. It is quick, it is simple, it's effective. They hit submit at the bottom. It comes right to me 24/7, and I will get them approved. I'll pull their credit, I'll get them qualified, and let you know specifically what they're able to do. There's lots of new nuance, lots of new underwriting guidelines that we need to be aware of, new things all the time. I mean, sometimes we find out about them when we're in the middle of a deal, but boy, these lenders are changing every day. It's crazy. All right. Hey, look forward to working with you. God bless you. God bless your families. God bless this country. Let's work together. I'm out here. Long time. All right. Bye-bye.